Hey everybody, Courtney Smith here with our Wall Street winners for May the 24th as we dive right into our disclaimer, and we're getting close to the first half of the year. So there's a lot of disturbing things happening in the market, and I'm going to pull in my horns. I'm going to be more conservative. Let's take a look at this chart right here. Here's the S&P, and you can see that the price actually made a higher high and a higher low in the last week. So it's the weakest bull market in history, but nonetheless, it's a bull market. But look at the purple predictor is just collapsing. And what that means is that the smart money is selling. They're getting more and more bearish on the market, and so they're not part of the buying pressure. So watch this chart. Now let's carry on. Here in the Dow Jones, selling pressure is now above buying pressure. Now it did come down a little bit, but the Dow didn't make a new high. It's kind of making mini new lower highs and lower lows. So it's in a mini bear move. Now, none of this is dramatic at all, but nonetheless, it's like, wait a minute, these are not the signs of a clear bull market. The NASDAQ showed a little bit of strength this week, but the purple predictor is relentlessly going down even as the price is going up. So it seems to me that what's happening is the smart money is bailing out. And I don't like to fight the smart money. I'll fight the dumb money all day long, but I don't like fighting the smart money. So this is bad price action in the purple predictor. Now, seasonality for stocks up at the top. We are past the normal seasonal period, which is, sell in May and go away. Now, we always say it can go an extra month longer. So we still got another couple of more weeks or a week or so still to go before the end of the month. So we'll keep an eye on this. But as you can see, the price action's been very sloppy. Utilities should be in a bull market right now. And in fact, they're showing a little bit of strength finally this week, but we don't have them. So we have them on a bull sign, but we're not doubling up our positions in Utes yet because it's a clear bear market. We add seasonality, but it has to be a bull market in a seasonally bullish period. Then we like to double up our positions. Now, here's the other thing that's disturbing me. So Stock Traders Almanac do a very good job here. And we want to look at the purple and the red line. The purple line is the first year of a Democratic president, and the red line is the post-election year after the incumbent party loses. You'll notice that in the blue box, we're kind of in a little choppy, sloppy period. I mean, no big deal, really. But notice what happens in June and July. The market dips. Maybe only 2, 3, maybe up to 5%. But it dips into early July. Then you can see we have a rally in July and into early August, and then a bigger dip from August, beginning of August, towards the end of September. This is the normal seasonal pattern. So we have to be very nervous here. Let's just put it that way. We have to be very nervous at least until the beginning of August. Now, at the beginning of August, the red line starts to go down, but the purple line, which is first year of a Democratic president, continues higher and is bullish. So, of course, we hope that that is the seasonality. But generally speaking, we expect some type of a dip in August and September. So that should be what we expect, and what we hope for is the purple line is the dominant factor. But the point is, over the near term, we could see this market move down 3 to 5%. So we need to be much more cautious right now than we have been for literally pretty much the whole year. This is the first time I've really gotten, sort of cautious. Asset allocation really has been flat now for almost a month. Let's call it 3 weeks, and really hasn't gained much at all in a month. So asset allocation is not really being supportive of this bull market. Risk. They don't want risk. They're running to conservative areas. They're moving towards the utilities, and that's where I'm thinking more and more about putting more money is into the utility sector as a way to make money while we go through the bad seasonality of the general stock market. And here it shows they don't want risk. They don't want risk. They want to be into staples, utilities, boring things like that. as a way of reducing the risk in their portfolio. So the market's running from risk right now, and that's bearish. Global shares, chop, chop, chop. Yield curve stable, nothing really going on here. Bonds stable, although I'm still bearish. Bond key factors are all saying we're going to have higher interest rates. So that's why I'm still bearish. But if you look at the chart, it's pretty stable. Purple predictor's not giving us any clues either. So we just stand on the sideline here until we get a clear picture. The dollar, on the other hand, is a clear picture. It's a bear market. Now we're coming down to major support that if you see it near the beginning in January and on the left-hand side of the chart, you see a very significant low. And we're getting close to that low, and we should see some buying come in at that level. But if we break that level, then, oh my God, we have to be really, really short the dollar. And that means, of course, gold is going up. And I think the easy way to play the decline in the dollar is to buy gold. So I'm looking to try to buy gold. I'm looking to find some low risk entry points. Even though it's a bull market, I don't want to get in unless I can control the risk. If I can't control the risk, I'll pass on the trade. Right now, I can't control the risk in gold, but I'm looking very, very closely at it. And as you know, I've been bullish now for, I guess, a month or so. Gold key indicators are kind of a mixed bag. Bullish up at the top. I don't know, is that sideways or down? Technically, it's down in the middle panel. And the panel on the bottom is kind of sideways as well. But fully paid up members, our key indicator that we have in our fully paid up member section, of course, is wildly bullish. Crude oil starting to fade. All right, I need to stop right here. The stock market is staggering. We see crude oil staggering. Crude oil is very sensitive to the economy. So what this is telling me is that the economy is weakening. That we saw the unemployment numbers a couple of weeks ago. They were dramatically below what was expected. People were expecting a million new jobs, and they got 250,000. 250,000 is a nice number, but far less than was expected. So what we're seeing is a reduction of the economic growth. Now, I've been working on a Biden boom bust scenario, a thesis. And I thought that this Biden boom, with all the incredible stimulus, would keep the economy going a little bit longer, but it looks like it's not. In other words, as we see the chances of the massive $4 trillion or $5 trillion, or you know what, I took off my shoes to count it. I can't count that high. The trillions of dollars, let's put it that way, it's fading away. It's getting smaller as they have to negotiate with the Republicans. And as a result, the idea that the economy is going to be stimulated by the Biden boom, by Bidenomics booming the economy, that concept is starting to fade, and it's affecting the stock market. It's affecting the copper market. It's affecting the oil market. So look for oil to just stay near we are. I'm in Dubai right now. I'll be meeting with people in the oil industry while I'm here to see what they think is going on. Bitcoin, of course, had a dramatic 30% drop in one day. Now, it didn't close down 30%, but it was down 30% a few days ago. Now, as you know, we've been telling you that it's not that bullish. We failed to make a new high a month ago. We broke lows a week and a half ago, and we told you that it was looking much, much more bearish. And I said if I wanted to do anything, I'd want to be bearish. We're calling the Bitcoin market better than anybody on the face of the earth, quite frankly. So at this point, I have no position. I'm not recommending anything, but we have to be bearish. A heavy breakdown on heavy volume, yeah, of course, you have to be bearish. There's no question about it. I don't have a short position. I wish I did, but that's how it goes. All right, freebies, thanks for being here. Fully paid on members, hold on for just a second. Hey everybody, Courtney Smith here, and I have a great new video for you. Free education. I'm going to teach you all about stochastics from the very beginning, the basic ideas of what is it. I'm going to teach you how people use it incorrectly and lose millions of dollars. And I also have in this webinar 3 techniques that I believe are killer techniques. Particularly one of them is just one of my go-to techniques. It's free. You can get it free. All you have to do is go to one of my YouTube channels. Go to YouTube, search on Courtney Smith Trader or Wealth Builder LLC, and you'll see the video there. Look in the education part of our channel, and you'll see that video for free. But just go there. It's free. 3 profitable techniques, and also one that you don't want to use. That's how everybody uses stochastic. They use it wrong, they lose money, and they're surprised. See you on the video.